This is the Martini Mortgage Podcast with Kevin Martini.
Hello, my name is Kevin Martini, and I'm a mortgage lender in Raleigh, North Carolina with the Martini Mortgage Group at Benchmark Mortgage. And this is episode 14 of the Martini Mortgage Podcast. Thank you for tuning in. I'm calling episode 14 of the Martini Mortgage Podcast, Let Us Do the Math. It is my opinion that buying a home is an integral part of the American dream. There are many things to consider before buying a home. After all, buying a home is an investment that will certainly impact you, not just financially, but also personally. I want to take a moment to remind those that are longtime listeners to the Martini Mortgage Podcast and those that are new to the Martini Mortgage Podcast that every season I create a home buyer guide that is, in my opinion, it simply and effectively communicates the current market opportunity. Now, you can gain instant and free access by visiting www.martinibuyerguide.com. Again, www.martinibuyerguide.com. I believe you have to have a roof over your head, and you have two options for that roof. Do you rent the roof over your head, or do you own that roof over your head? Let us do the math. If you rent something, let us say a single-family house in a residential neighborhood at, say, $1,300 a month for 10 years, with an annual rent increase of 1% per year, it would look like so. Year one, your rent would be $1,300. Year two, your rent would be $1,313. Year three, it would be $1,326. I think you get the idea. By year 10, your rent would have increased 1% per year, and your mortgage or your rent payment would be $1,421.79 a month. That is a total of $163,210, and with that money, you have paid off your landlord's house, or you helped your landlord buy a Tesla and a Toyota too. The second roof option is to buy a home for, say, $150,000. For illustration, let us assume that either I or one of the mortgage strategists at the Martini Mortgage Group at Benchmark Mortgage believe the best product for you is the Rural Development Home Loan. This mortgage program offers no down payment. For illustration, let's assume an interest rate of 6%. Again, this is for illustration only, since the current market rate may be materially less. If going to make an assumption that the annual homeowner's insurance would be about $600 a year and the property tax would be about $1,500 a year. Since we are assuming some things, let's assume a modest appreciation of 2% per year. Now, I am not guaranteeing any future appreciation. This percentage is for illustration only, since the home price expectation survey from Pulsenomics is materially higher. Your principal and interest payment would be $908.32, and that is considerably less than the $1,300 in rent. In episode 6 of the Martini Mortgage Podcast, which can be found on iTunes or can be accessed by going to www.martinimortgagepodcast.com, I discussed the 5 financial reasons to buy a home. One of the 5 financial reasons is the potential tax benefits of owning a home and having a mortgage. For illustration purposes, let us assume that you are filing single, you do actually itemize your federal taxes, and you are in a 22% tax bracket. With this assumption, your tax benefit would be $2,763.48 a year, or over $33,000 over 10 years. Another of the 5 financial reasons to buy a home is leverage. You see, housing is one of the only leverage investments still available. Homeownership allows a household to increase appreciation by a leverage factor. in the example I shared, in 10 years, assuming, for illustration only, a modest 2% depreciation rate, that $150,000 home today would be worth $182,849, meaning $32,849 of appreciation in 10 years based on a 2% per year appreciation rate. It is important to highlight, I do not know where the future of home values is going, and I am not making any claims or guaranteeing that the home values will increase. I do want to highlight that one of the 5 financial reasons to buy a home is for savings. You see, every month when you write a check for your mortgage, you're not just paying the interest, you're paying down your principal. When you pay your principal, you are reducing the amount you own. So staying with this example of a $150,000 mortgage secured today with a standard 30-year amortization schedule would have a balance in 10 years of $126,784. So for illustration, that $150,000 home you purchased 10 years ago would be worth $182,289, and the loan balance would be $126,784. So you would have a total equity of $56,605. Here is the Kevin Martini bottom line. You have 2 options. You could rent for $163,210, which I am sure your landlord is going to simply love, or you can own your own home. You have to have a roof over your head. You can rent it or you can own it. I'm here to help you explore your options. Owning might not be right for you and your family, and that is okay. But I believe you have a responsibility to find out if it is or isn't, and I can help you with trusted mortgage advice. Homeownership comes with a lot of benefits. However, there are some potential drawbacks since there are no guarantees. It is not just nice, but critical that you give careful consideration of your lending options before even to start your home search. And I believe advice on one of your largest financial investments cannot be given by an app. I truly believe you need a trusted mortgage strategist like the ones at the Martini Mortgage Group at Benchmark Mortgage. Yes, we are located in Raleigh, North Carolina, and yes, we help families all over the great state of North Carolina. However, we have a network of trusted mortgage professionals across the U.S. So if you're not in the Triangle of North Carolina, or you're not in the Triad of North Carolina, or you're not in the Queen City either, we can still help you with a personal introduction to someone like us anywhere in the U.S. Every day it is my duty, my obligation, and my responsibility to help families create wealth with real estate. We can help navigate the ins and outs of buying a home with you. For trusted advice with someone that has a servant heart, then give the Martini Mortgage Group at Benchmark Mortgage a call at 919-238-4934. Thank you for tuning in to the Martini Mortgage Podcast. And remember, it does not matter how big the house is. It's all about how happy the home is. Know that our family is your family lender.
Thanks for listening to the Martini Mortgage Podcast with mortgage strategist Kevin Martini. Don't forget to follow us on Instagram at Martini Group and check out our website at martinimortgagegroup.com. Tune in next week for another episode of the Martini Mortgage Podcast. The information contained in this podcast presentation is for general product information purposes only. Arklatex Financial Services, LLC, NMLS number 2143, doing business as Benchmark Mortgage, makes no representations or warranties of any kind expressed or implied about the completeness, reliability, suitability, or availability with respect to the information, products, or services. All loans subject to borrower qualifying. Other restrictions may apply. Branch Manager Kevin Martini, NMLS number 143962. Branch located at 5650 Six Forks Road, Suite 101, Raleigh, North Carolina 27609. Contact the branch by calling 919-238-4934. Equal housing opportunity.